This is Andrew Stotts of A Stotts Investment Research to talk to you about the U.S. equity FVMR Snapshot, what I like to call U.S. in your hand every week. Remember that I look at the stock markets and stocks based upon a FVMR framework, which stands for Fundamentals, Valuation, Momentum, and Risk. So let's step through it. If we look at the U.S. equity markets, first thing we can see is that in the U.S., the ROE is expected by consensus to be about 14.8% relative to 11.7% for the rest of the world, or the total world, including the U.S. So quite a premium ROE. If we look at a couple sectors, we can see that the worst is energy, and we can also see that the second worst is financials, both of them struggling right now. Consumer discretionary and consumer staples are doing relatively well at extremely high ROEs. Dividend payout ratio in the U.S. is expected to be about 36.6%, so slightly below the rest of the world. And if they're earning such a high ROE, why not keep the money and keep reinvesting it? The highest dividend payout ratio is the energy sector, but that's because of a very distressed equity base. If we look at telecoms and utilities, well, typically in the U.S., these two types of companies are paying out a lot of dividends, and that continues right now. If we look at valuation, we can see that the U.S. is trading on a premium. Well, that makes sense since ROE is trading on a premium. U.S. is trading about 18 times versus 16 for the rest of the world on PE. Some sectors, such as energy, are trading at a very high PE, and this is because they're cyclical. Earnings have collapsed because of falling oil prices. Financials trading on a relatively high 12.6 times PE compared to the rest of the world. And what we can see on price to book is that the U.S. is trading on 2.5, so that's a premium over the 1.8 for the total world. Some sectors, such as consumer staples, are trading on a massively high 5 times. But again, this is the highest ROE sector in the world, and also in the U.S. So financials are trading just slightly above book value. For many companies, that would be considered cheap, but for financials, that's not necessarily cheap. We look at EPS growth or momentum in earnings. What we can see is that the world's earnings growth expectations is about 1.5% versus the U.S. at about 1.2%. So a very tiny amount of forward growth. Some sectors, such as energy, that have been going through a lot of volatility, see some extreme growth and collapse because of changes in oil prices and coming off of a very low bottom. Consumer discretionary sector is growing at about 9%, so that's a relatively good result. If we look at the price momentum, we can see that over the last year, world equity markets are down about 3%, but U.S. is up about 3%. In a world of destabilization, well, the U.S. ends up looking like a safe haven. Is that a plan? Is that a political plan? Well, maybe. And if we look at energy, we can see that the energy sector, because of falling oil prices, has collapsed quite a bit, more than any other sector. And then the stability of the utility sector has proven itself, where we can see utilities are up 22.5%. Finally is risk, and if we look at gearing, we can see that the infotech companies, the startups in the infotech space, have net cash. They're sitting on a ton of cash, and they're making a lot of money. And we can see that telecoms and utilities have very high gearing in the U.S., and price volatility in the U.S. is relatively low at about 11.5% compared to the rest of the world. Volatility among sectors is high in the cyclicals, such as energy and materials, and it's high in the financials. If we look at it, some sectors have the lowest level of volatility. For instance, telecoms at about 11% volatility, and the consumer staples sectors too. So let's run through this. Fundamentals, well, U.S. ROE is above the world, and the best profitability is found in two consumer sectors. Telecom and utilities are expected to pay out the highest portion of earnings as dividends. Valuation, well, the U.S. is trading above the world. Energy is expected to remain expensive on a PE basis. And consumer staples is most expensive on price to book, but delivers the highest ROE. If we look at momentum, well, U.S. EPS growth is expected to be slightly below the world in 2016, but price performance has been better. Consensus expects earnings to rebound in 2017 in the energy sector. And the best 1-year price performance has been in utilities. Risk, well, infotech sector is net cash, hence low balance sheet risk. And in the past 3 months, materials, financials, and energy has been the most volatile sectors. So if you like the FVMR Snapshot, get it. You'll always be up to date. You'll know all the numbers. You'll be professional by using what professionals use. Do nothing, because all you have to do is leave a comment below or sign up at BABI now.